All right, we're back with you, and we're going to take another look at our grain market activity with help from quotes from bar chart. Let's take a look at our corn market here. We'll go to the big board, and as they magically appear on the corn on September, right now we are down a little over 6 cents, almost 7 cents now. We're down 6 3/4 at 4.90 1/4. Boy, we're just trolling around near the bottom of the daily trading range here. We're still in the neighborhood of about 22 cents off of our overnight high. December corn down 5 1/4 at 5.02, just a penny from our low of the day. Now in soybeans, you have September down 21 cents now at 13.65 3/4. After it was over 14 bucks momentarily last night, it got as high as 14.01 1/4. And now we have dropped off of that by about 6 cents, I guess. November down 23 1/4 at 13.18. So all kinds of pressure on the soybeans today. In wheat, we had been sharply higher last night, and then they took it all away and went that much to the downside today. You have December, Chicago wheat now 13 1/4 lower. It just changed to 6.65. That would put us a penny and a quarter from our low of the day right now. It got as high as 7.09 1/2 last night. In Kansas City on that December contract, we're down 24 at 7.93 3/4. It had a high of 8.41 3/4 last night. And in Minneapolis wheat, you have December down 14 1/2 at 8.55. Kind of the same story there. It's off its high by about 31 cents. Cotton market, sometimes it'll go the opposite direction. Today, it's going down too. You have December down 89 points at 85.33 per pound. And here to talk about it, we have Todd Bubba Horwitz with us. He's with BubbaTrading.com, and he's actually in Las Vegas this week. So maybe a little bit of profit taking today, or what do you think is driving this market down the way it is today?
Marlon, how are you? I don't know. I think part of it's got to do with the debt downgrade. You know, the country is not functioning properly. And when you get a debt downgrade, it kind of puts pressure on everybody and kind of puts pressure on markets. You know, everything was looking pretty good last night, and suddenly we saw this big dramatic sell-off from the highs. It could be a little bit of profit taking, but it's certainly accelerating as we're watching pretty much almost all markets just getting destroyed right now. But I think a lot of it's got to do with just kind of, we'll call it wholesale selling across the board.
What do you think the funds are doing right now? Are they kind of evening up positions compared to where they were maybe a week ago? What do you think?
I think they're trying to short again. I think they were short. They got trapped. We saw a big rally at it. And I think that we're going to see a continuation of them trying to push here. Now, I would suspect in the grain markets, at some point, we're going to find a bottom. They're going to trigger and bounce. But right now, like I said, if you look anywhere, you look at crude oil, you look at the indexes, you look at just about any commodity and any index, and it's red. My whole screen is red right now, across the board, basically.
So wouldn't it be kind of a tall order or a big uphill battle to get a rally before harvest time between now and then?
No, I don't think so. Listen, I think we're really underpriced. Just from a straight, futures supply demand curve, and you add in the input costs, which I think at under $5, I think we're almost below input costs for corn. So how is anybody going to make any money? How is anybody going to want to produce? And how are they going to release it because of where they're going to have to sell it at? There's a lot of things going on here that don't make a lot of sense, and of course that is markets getting ready to make a move. And in my view, it looks like equities are getting ready to crack here, which would be good for the grain markets, and I would expect that at some point your grains will make a rally.
Yeah, it seems like a lot of the interest and the money flow is kind of heading that direction here the last week or two. What's your word of advice for folks that may be caught with some old crop in the bin yet, and they're wondering what to do with it between now and making room for the new crop coming in for harvest?
The big question there is, are you storing it yourself or are you paying for storage? If you're paying for storage, get rid of it. If you're storing it yourself, hedge it. The farmers should learn that they should always just be hedged automatically, and then they don't have to worry about some of the disasters that do show up, and they still get the benefit from the upside if they do it properly. And that is one big point that we have to pay attention to at all times. It's just the same as in my equity portfolio. It's always hedged. I don't care. I'm happy the market's going down because I'm going to buy some more equities at lower prices. In the grain markets, you want to make sure you're protected and that you get some of that money that you're going to sell it at. Even if you have to sell at lower prices, you've collected on your hedge. But you have to be able to understand how to leave the upside open in case we do get that big market that we're looking for.
Well, right now, the Dow Jones Industrial Average is down 250 points on the September futures. And meanwhile, I was looking at the U.S. dollar index. Right now, it's up a little over 400 points. That makes it a little harder to sell our stuff overseas, and they're kind of going against the grain, if you will. Todd, great to talk with you again. Thank you for all the help this morning. Todd Bubba Horwitz of BubbaTrading.com. He's in Las Vegas, and we'll pause right here. We'll take a look at livestock after the break.